This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy.
GameStop, WallStreetBets, Robinhood. You've probably been hearing these names non-stop for the past week. Every finance YouTuber you know has already done a video on this topic, and honestly, we didn't want to be another one. We figured this GameStop hype would be over by now, and we'd all go on with our lives. But there's a lot more to the story, and a lot of important things investors need to understand about how the stock market works. So in today's video, we aren't going to focus on short squeezes or how WallStreetBets is taking over the stock market, because you've likely already seen that. We're going to focus on what's happening behind the scenes when you make that free trade on Robinhood, why people are furious at Robinhood, and how all that free trading had the power to blast GameStop prices to the moon and then send it tumbling back to earth. We're going to spend a lot of time looking under the hood at the mechanics of trading, but by the end of the video, you'll understand why. We're going to go behind the wall of Wall Street. Hi, I'm Laura, and I'm a certified public accountant. And I'm her other half, Monique. I'm a pharmacist, but I love personal finance and investing. Welcome to Finance Pillow Talk. On this channel, we talk about personal finance, investing, and entrepreneurship. So if you're interested in these topics, smash that like button, subscribe, and let's be rich. As an aside, we also sell these really cute merch. So click on our link. It helps us out a little bit. We do make these videos for absolutely free. And yeah. And we did just get rid of our Robinhood links. So yeah, thank you. How you are able to trade for free on Robinhood. Not too long ago, traders had to pay commissions for every trade they made, ranging anywhere from $4 to $20. That meant that every time you bought or sold a stock, you would have to pay this fee. So you can see how being an active trader could easily become a very expensive hobby. These fees kept many average people from taking part in the stock market because it was just too expensive. But in 2013, Robinhood completely changed the game by offering commission-free trading. What used to be $20 a pop was now free. Since then, most brokerages have also adopted commission-free trading to compete with Robinhood. But there's no such thing as a free lunch. So how is Robinhood able to take something that used to cost $20 and give it to you for free? Let's say you put in an order to buy a share of Tesla stock through Robinhood. Robinhood takes your Tesla order and sells it to a market maker. The market maker then finds someone who wants to sell their Tesla stock. Market makers match up buyers and sellers, and then they make a profit by buying shares for slightly less than the price they sell them for. The difference is called the bid-ask spread. You request to buy Tesla at $100 a share. The market maker matches you up with someone willing to sell their Tesla share for $99.95. The market makers keep this 5-cent difference between the buy price and the sell price. It may only be a few cents, but when they're processing millions of orders, these few cents really add up. So market makers make a few cents on the difference in buy and sell price. They pay Robinhood for the privilege of processing your order, and then Robinhood passes that savings on to you, so you can trade for free. Everyone's happy, right? Well, let's take a slightly closer look. The practice of selling orders to a market maker is called payment for order flow, and many brokerages operate this way, including Robinhood, E-Trade, Charles Schwab, and TD Ameritrade. However, unlike those other brokerages, Robinhood does not publish data on how much it is paid by market makers, so it's difficult to say exactly how much of that cost savings is really being passed down to Robinhood customers. Market veterans say that executing your trade through Robinhood gives you a slightly worse price than using another brokerage would. But it's hard to say with certainty since we can't see the numbers. Okay, whatever. Robinhood makes a few extra cents on trades compared to other brokerages.
3 cents a share. That's $3. You cheap.
They still created a super user-friendly app that brought the world of investing to so many more people. Robinhood sells order flow, but so do other brokerages. And yes, Robinhood limited trading of several meme stocks, including GameStop and AMC. But again, so did several other brokerages. So why is everyone so mad at Robinhood right now? To understand that, we need to look even closer at what happens behind the curtain when you buy and sell stocks. Clearinghouse requirements. When you buy a stock on Robinhood, you press buy, and then you instantly see a message saying your order was executed, and you're congratulated with on-screen confetti. Awesome. But in reality, you don't own that share of stock yet. it still takes 2 days after the trade happens for the shares and money to be exchanged and for the transaction to be fully settled. This is referred to as the trade date plus 2 days to settle, or T+2. After a trade is executed, we add another player to the game, the clearinghouse. The clearinghouse acts as a middleman between buyers and sellers in financial markets. They validate and finalize the transaction, ensuring that both the buyer and seller honor their contractual obligations. In order to do this, clearinghouses take the opposite position on each side of the trade. The fact that clearinghouses have to take both sides of the trade puts them at risk of default from both parties. To reduce this risk, clearinghouses require their members to deposit cash or collateral to cover their obligations, known as margin. When dealing with riskier trades, clearinghouses may increase their margin requirements. On January 28th, Robinhood announced that due to ongoing volatility, some securities like AMC and GME are position closing only. This means that Robinhood customers were not allowed to buy these stocks, but they were still allowed to sell them. Robinhood CEO Vlad Tenev reported that they decided to limit the buying of these stocks due to increased cash requirements of around $3 billion from their clearinghouse. So Robinhood limited buying of meme stocks, but so did some of the other brokerages, including Webull and E-Trade. Again, this doesn't explain why people are specifically raging against Robinhood. Alright, let's go deeper down the rabbit hole and look at some of the parties involved with Robinhood. So who's in bed with Robinhood? Melvin Capital. Melvin Capital Management is one of the hedge funds that heavily shorted GameStop stock. Shorting a stock means you're betting the stock will go down. Shorting can be very risky. If the stock you shorted goes up, your losses can be infinite.
Got it? Okay.
As we saw, WallStreetBets members banded together and sent GameStop's stock price soaring with their diamond hands, and in turn, decimated Melvin Capital. Melvin Capital lost 53% of their investments in January, but Citadel LLC came to the rescue, investing $2 billion of emergency funds into Melvin Capital. Citadel. Citadel LLC is an American multinational hedge fund and financial services company. Citadel LLC operates two primary businesses: Citadel, one of the world's largest asset managers, and Citadel Securities, one of the leading market makers in the world. Citadel Securities is one of the main market makers that buys order flow from Robinhood. In December alone, Robinhood generated $12.4 million by routing orders to Citadel Securities. So the theory goes something like this. Melvin Capital shorts GameStop and loses a bunch of money. Citadel bails out Melvin Capital with $2 billion. Citadel is also the source of millions of dollars of Robinhood's income. Robinhood shuts down the purchasing of GameStop, which then sends the price of GameStop tumbling back down, which would benefit hedge funds, Melvin Capital, and Citadel, and hurt the average investor.
You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't, it was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Citadel and Robinhood have denied that Citadel had any influence on Robinhood's decision to stop the ability to purchase GameStop on Robinhood's app. Do you believe them? Well, they're all under investigation, so I guess we'll find out. Maybe. Either way, this is not the first time Citadel has been in the crosshairs. Last year, FINRA, the Financial Industry Regulatory Authority, fined Citadel Securities $700,000 for trading ahead of customer orders. As market makers, Citadel is able to see all the orders as they come through. It's possible for them to see which stocks are going to make big moves and put in their own orders first before processing the orders of their customers. This is also known as front running. Citadel didn't admit or deny these claims, but they did pay the fine. The entire GameStop saga has created a lot of controversy. there have been claims of market manipulation from hedge funds as well as WallStreetBets. Huge names like Elon Musk, Mark Cuban, Alexandria Ocasio-Cortez or AOC, Chamath, Palihapitiya, and many more have thrown in their 2 cents.
I think that what you're seeing is essentially a pushback against the establishment in a really important way.
This event created and lost fortunes. Several parties are under investigation, and we're sure there will be a lot more to this story in the coming weeks. Until there are more answers, we'll be removing our Robinhood affiliate links and encourage you to use other brokerages like Fidelity, TD Ameritrade, or Webull, all of which we currently use. Webull is offering 2 free stocks valued up to $1,850 when you open and fund a brokerage account with at least $100. Robinhood says that their mission is to democratize finance for all. In a way, they've done that by providing an avenue for millions of new investors to enter into the world of financial markets. Robinhood is currently #1 on Apple's free app charts and was downloaded more than 600,000 times in a single day during this GameStop frenzy. So that ability to trade for free brought in all these new investors and gave normal people the ability to move markets. And on the flip side, shutting these new investors out was able to move markets just the same. So thank you, Robinhood, for making investing affordable and fun with confetti and an easy-to-use app. But to all you new investors, remember, nothing is really free. Everything comes at a price. Keep your ears and eyes open. Keep learning, invest in what you know, and let's be rich. Let's be rich. Let's be rich. Finance Pillow Talk? Finance Pillow Talk. She made this logo. You're very talented. Okay, let's go get Boca. All right, thanks. Bye. All right, bye.